Alrighty, I want to welcome everyone to the Hurley Investments Financial Services Commentary on this Tuesday, April 18th. I'm going to do a couple things that I normally don't do, and I'm going to bring up some accounts. But before we start off, I'd like you to tell me what's going on in our market. Couple sell-off days, a holiday, big up day, big down day. Tell me what is going on in our market today. Dave, short-term downtrend. I would agree with that. Define short-term, though. Define what a short-term is. I would agree with that, but define what a short-term... Okay, well, maybe. I'm just going to say maybe. Dave typed in 6 weeks. And yeah, I guess you could see 6 weeks. If I came out here and I took a marker on our downtrend, definite 6 weeks, and it's kind of making a pennant. If you stretch that out, we probably have a couple more weeks to go. But yes, a definite short-term downtrend. I would buy that. Anybody else have any ideas what you might say that we're in or what's going on? I've got a couple more here. Let me get these answered. Not great earnings for Goldman Sachs or IBM. Pull the market down. Well, IBM was after the market closed today, Maud. But if I can go ahead for Keeve there, yes, financials and financials with Johnson & Johnson. I'd agree. We had Goldman Sachs and Johnson & Johnson missed earnings badly. Now, I'll be honest with you. I may have bet a couple of my employees some Snickers today. My thought was we'd have some follow through. Again, it comes right back down to looking at that chart. I thought we'd have some follow through and do 2 days and break the 50-day simple moving average. With how strong we were the other day, where we came right up to it, I would have, well, I did bet. I was certain that we'd go right through our 50-day simple moving average and head back up, being at the lower range of that trend for the last month. It did not happen. So I then went and I had to look at accounts and I had to justify what I was doing. So this is, for those of you that don't know, this is how I take a peek at things. In all honesty, this is my group, or I'm showing my group of the education group. I got almost $7 million that I've picked up through education one way, shape, or form. I've got some a second group, which I kind of call my friends and family group, and then obviously I have the one business that I manage that money for. Up today, overall we're up $5,344 on a S&P that was only down 7. Dow Jones down 113, and the NASDAQ was only down 7.3. So this is how I look at things. Now, as I take a look at positions, I came here this morning and I did nothing more than pop everything open, and I said, okay, what's going on? And I popped open Apple, and I just have Apple shares. I looked at my mark. It was only down 13 cents, which means I was closer to 140, 150. And literally all I'm doing is taking a peek and marking between what I saw, and I would bring up a chart. And this morning I took a look to see if there's something I was worried about. Well, it looked like Apple was below its. Let's get rid of that. Sorry. It looked like Apple. Let's see how I'm going to make this all work. All righty. So I took a look at Apple. It looked like Apple was above the 50-day simple moving average. It looked like it was holding its median line. Yet we do have crossovers all the way back to March. Yet on the MACD, I saw, hey, in all reality, the 50-day was still going up, and it's higher than it was the 1st of March there. I felt okay in seeing what I saw on Apple. So, do you think I did anything to my Apple positions today? With what I saw, was there any reason to do anything with Apple? Of course not, Doug. Yeah, of course not. Keep it as it is. No reason to do anything. Looks okay. And literally, I just kept going through my positions. And I'm going to walk you through exactly what I did this morning. I've had Apple for a while, so obviously I need to be a little careful with that. But the old Smith & Wesson, right? Crud, I only have 1,000 shares, or I've just jumped into it. It ended up being down 13 cents. And I'm going to keep stretching this out a little bit. Cost basis is at 21. I'm up at 21.19. I'm kind of just sitting on it right now. Took a look at stock charts, and literally all I did is went back and forth, and I'm going to walk you what I looked at this morning. AOBC. Took a peek at it and said, you know what? Still bullish. It's in a range. Nothing that I felt I needed to do yet. I do have a list, and hopefully you guys have started your list of earnings. As I pull up my earnings list, AOBC is not till May 3rd, so no real reason to panic or to throw anything on today on AOBC. And again, if it's okay with you guys, I'm just going to keep walking through what I kept looking at and doing as we were here. Alibaba, just a covered call. Alibaba has earnings on the 5th of May. I've got a cost basis at 96. I got a 105 covered call, so I've got some credit there. I'm really just waiting on Friday for this to get called away. I'm trying to book a profit. It's way up at 111. I don't have to worry about or do anything about Alibaba. Well, Kevin, 105, you got in, have a cost basis at 98. Made great money on long puts in the past. Don't have a big feel for Alibaba. Other positions I'd rather be in. I'm good to go. Bank of America, dang it, had its earnings today. I've got 23 long puts on it. I've had it on for a while. Spent $1 for it. Had on for a while, had great earnings. I've got 40 cents on the first up day on Bank of America. I've got to take my long puts off. That was my thought process. All of a sudden, though, I pull up my chart, and as I looked at Bank of America, I really can't pull those puts off. It can't get above 23.96. It's technically bearish. I might be adding some long puts, or at least some covered calls, on a company that had great earnings and that was down today. Couldn't believe it. Mod H and S on BAC. What do you mean? I don't understand. Head and Shoulders, of course, that's what you're talking about. Um, yeah. Well, yes and no. It's funny. You could call the head right there on March, half of the head on your gap, the other half in February. But usually on a head and shoulders pattern, it's more pronounced, like you see March through April. You don't necessarily see that December through February. Um, Possibly, if I was really going to check to see if it was a head and shoulders pattern, I kind of do my chart patterns all through FinViz. But I don't know. Don't see it. Doesn't mean I'm wrong. I just don't see it. By the way, pretty amazing position. I was going to show this to you. So actually, I'm going to show it to you on the Dow. I took a look at the Dow. I wanted a quote on the, took a look at the Dow, and I used a technical events on it. And I took a peek, because some people say, Kevin, you're so bearish on the market. And let's hope this comes up. I'm so bearish on the market. I just took a peek using their technical analysis. They call it technical events. There have been 7 technical events that have occurred on the Dow just in the last little while. And as you go to these 7 technical bearish events, they list them all right there. Double moving average crossover the 21-day for the 15th happened yesterday. Price crossing moving average on the 50-day happened on the 12th. Momentum on the 11th. MACD on the 7th. Relative strength index on March 24th. Commodity channel index on the 24th. March 10th. Short-term KST. Well, I don't know what this is. You know, you just click on them and it gives you, pops it up exactly what it is. A KST is the no sure thing as an indicator that combines multiple time frames into a single measurement of momentum for financial instruments, can be interpreted in the same way as a smooth oscillator. Most often indicates bullish and bearish momentum, signals across above and below moving average respectively, and it kind of gives it all to you. So this morning I took a peek, and obviously we have 7 technical events on the Dow. As I took a peek and looked at it from the S&P point of view, we have 8 bearish events, but we do have 1 bullish event there. So I kind of got interested again just to take a peek to see what we have. And man, that bullish event happened back on December 9th. So again, I'm looking at all these and saying, our market is turning. And instead of looking at a chart and saying it looks like it's turning, I'm a facts and figures kind of guy. And these are some of the facts and figures that I look at that are technical events, but through Trade Monster, it's Options House now actually, they give you significant understanding of what they're looking at and how it's there. So if I was to do that same thing and pull up Bank of America, which I did not do, let's take a quick peek and let's see what. Oh, they don't offer the same thing, so that's why I did not do it. They don't necessarily have the technical indicators on Bank of America. But plain and simple, great earnings. This will skyrocket higher based on the news events that comes up. Um, Nothing that stood out to me. So, so if you don't mind, I'm going to keep going on along. Baidu, I already have a long-term protective put. It's set for earnings. Nothing for me to do right now. It's in that range of 170 to 175. I'm just sitting and waiting for earnings to come on Baidu. Earnings on Baidu are on the 26th next week on of April, first week of options on May. Had Citigroup protected, went from 57 up to almost 59 and a half. I have May options, and as I took a look at chart on Citigroup, there's FinViz. As I took a look at Citigroup, just looking at the chart there, stuck below its 50-day. Technically, it's bearish. Had great earnings as well. Can't take it off. I take a quick peek and FinViz. There it is. As I take a look at Citigroup, coming to a point. Coming to a point, has a pennant, still has upward long-term trend line, support down there at 56. Just bouncing off of the lower bound trend line. Still looks like it's going up. And literally, I went through all of these. Are there any in particular that you'd like to go over as you see for these last ones that I'm in? Clorox, DHA Horton, which has earnings on Thursday, Disney. Really for Disney, I've got 110 long puts. Nope, I'm pretty much just in shares of Disney. Nothing to really worry about. Earnings on Disney is going to be the 9th. I will talk about NVIDIA here in a minute. Facebook, alrighty. Facebook right now, I have multiple positions on. I rolled a collar trade. I'm out to June. Nope, I just have long calls. Short calls. That's Ford. Let's see. Thought I was in a full collar trade. Yes, I am. Wrong position. There we go. I've got May 140 long puts for earnings on 5/3. Looks like for Facebook. I have June 150 covered calls. So as I take a quick peek at Facebook, stock ownership at 97. Obviously, I've spent some money for some protective puts along the way. Pretty good gainer for me. I have the short calls with credit of 248. I may take those off for a profit before earnings and just let it run. And I've got May long puts that I spent 547 for. So I got about $3 of cost in Facebook to protect, and it wouldn't surprise me if it gets right up. I will most likely take off my short calls. Kevin, why would you do that? It came right back down to this chart on FinViz. Look at how open that is. Could be a huge drop down because support's not till 135. Kind of weak support. 130 probably has bigger support. But this thing, since August, keeps bouncing off that upper trend line. Um, for me and Facebook, I will have just a long put, most likely for earnings. Take some profit off those short calls. I can always add the short calls back on if it drops below 140. 140 is where I'd look to add short calls. Drops below 130, I can roll those short calls down for a profit, add them again, and keep running through it. We did have someone that asked a question on NVIDIA. Sent me this, what I thought about NVIDIA, and I'm going to go ahead and I'm going to bring up some information here. So I'm going to look at NVIDIA one more time, and I thought I did this a while ago. Bearish, and I've got like a 42.50 short call for January with an $18 credit. So I've got this huge credit for NVIDIA way out there in time. But it's bearish, and they had this article, and they said, okay, Kevin, what's your due diligence on NVIDIA? So I'm going to just show you. I picked up some numbers here. I'm going to go ahead and I'm going to get them. I looked at earnings per share. I worked at earnings per share next year. I worked at PE, forward PE, and I'm just going to work out my numbers that someone asked me about an article that basically said, boy, we sure do have NVIDIA underpriced. So if I look at NVIDIA, I'm first going to go to the earnings per share, which are $2.51. And if I multiply that, as I said, as I multiply that by the current PE ratio of 39.56, as I show that off to you, times 39.56, I came out with a price of $99.29. I can take that same number and calculate the earnings per share and do it on the forward PE going out in time. And if I multiply that by the forward PE going out in time, I come with a price target of $73.66. Well, Kevin, you need the next year's forward earnings, which are speculative, right? 3.38. And I'm going to go ahead and I'm going to put that at a pretty standard 21 times earnings for technology. And when I came out to that one, I came out calculating $70.98. So I definitely see, so we have what? A forward peg ratio times 22 standard tech valuation. I came out the price of 70.98. And as I was working on, obviously, NVIDIA, hey, it's way overpriced. In fact, if I calculate more on that 17 level for a more established type of technology company, it now brings me back down to around 58, below my $60 price that I'm going to get called out of. So as I look at NVIDIA, for the person that sent me the email and asked what I thought, are they really going to be back up to some ridiculous pricing? Kevin, how do you define ridiculous pricing? Well, again, I came back to looking at $42 calls for an $18.75 credit. I came out to a quote on NVIDIA, and as I took a peek at their the heck did I look on NVIDIA? Oh, I think I did it on FinViz. Did on FinViz. As I took a look on NVIDIA and saw the upgrades, reiterated a buy by Canaccord Genuity. Who the heck is that? 130 to 125. Oh, they have it going down in price. Pacific Crest, sector weight, underweight. It's a downgrade. I'm not sure who McQueen is. InstinctNet, buy, and it's reduced. RBC Capital Markets outperform 124 to 130. Reiterated though, out in February. I don't know. As I just kind of went through some of these, UBS I would take in at January 6th for reiterated, buy between 195 and 120, which means they sold when it got up to the 115 range. I just don't see it. I don't see it. When I see upgrades on November of last year to Barclays as underweight to equal weight at 54 to 72, those price targets mean more to me than I've seen elsewhere. I would not be in NVIDIA right now, nor would I be putting money to work in NVIDIA. SPY. Why do you have protected puts on the SPY given the S&P 500 appears to technically be bearish? So, quick reason here. A couple people just asked SPY. So let's go back to the SPYs right now. And what Roy sees there. So I have some S&P 500 covered calls. And pretty neat because I've rolled down from 239 and I've got 238s. So I'm looking at taking in about $4, $4.60, I believe, for the May net for May 238s, with on general a price target at 238. Kevin, why have you not added? Looking at just a standard chart, why have you not added as of yet SPYs long puts? And as you take a look, it basically broke 4 days ago, right? So it broke right here, which is going to coincide with right here. And it's been up to touch for 3 days in a row the 50-day. Technically speaking, you are correct. It's bearish. So if I would have thrown it on right here, where it got technically bearish in 1 day, we would have lost some money. Hey, it's holding the 50-day. So I saw it holding the 50-day. For that reason, I have not yet added long puts. It also is still holding 232, which goes through right there. So I am looking at 232 as my trigger for long puts. Kevin, you're going to miss the boat. You're going to be too slow. Well, if you have not been in the market for the last little while, our market for about 8 years now has been a buy the dippers. It's a buy the dippers. Up until 4 days ago, guess what? We were still following our trend line. And not only that, but after I allowed 1 day for that break, It was an ugly day. I was ready to add long puts on Thursday, on Wednesday, and today. Well, we came back up. We came back up to touch it. So the short answer is I have not seen enough to be convinced to spend money on the S&P 500 on a downtrend that is not technically verified yet. I'm using 232. If I use 232 and follow on down, we're probably going to head down to this 226 level, but we seem to be holding the horizontal level of support at 232 pretty decently. Not only that, we took in a pretty nice dividend for the quarter, and I'm hopefully looking for another dividend on that quarter. Great question. I have another question here. Kevin, what rule are you using, and will you change it to a 9 and a 20 day on the SPY? So let's take a look at the 9 and the 20 day and see if we see something a little bit different. Exponential, exponential, 9 and the 20. Boy, you can't even see a crossover there. Let's go ahead and let's shorten this, fill this out to just 3 months. Yep, goes back to that 4 days ago. So we're talking Wednesday of last week that you finally got your crossovers, and that was verified. That was Tuesday of last week, verified on, that was Monday of last week, verified on Tuesday, Wednesday, Thursday, Friday, came up to test. And I was looking at those tests. Yes, those tests occurred, bouncing up against the 50-day. Kevin, it looks like it's right there, not verified. And, you know, guys, if you're always scared of the market there, Dave, if you're scared of the market and just throwing stuff on every time it looks like you're going to need protection, plain and simple, putting it on right there cost you. Putting it on right there cost you big time when you have it coming back up. It's been a buy the dipper mentality. So I'm using a little bit of patience. We'll see a lot more through earnings. If earnings comes up really bad, you better believe it, I might add 1.5 times the puts on. So I can be profitable down around 226 and take at least a set off, maybe half a set to be protected. So good questions, both of you. Let me go through some other stuff I just have written out here. Where we end our markets this week, I'm going to say higher. And the reason why I'm going to say higher are 100% because of earnings. As I go down and look at earnings, Abbott, Morgan Stanley tomorrow, U.S. Bank Corp, Qualcomm, eBay. Thursday, we have E-Trade, Verizon, Visa, DHI, which is DH Horton, which seems to be doing better, G, Honeywell, Schlumberger. We've had higher oil prices. Today we had Bank of America, which really pretty good earnings. Granger was pretty good. I didn't see KMI's. Johnson & Johnson was bad. IBM blew it after the hours. So I would expect us to be a little bit lower. I'm still expecting us to be down 2% in April. Technically looking at our stock positions, bearish. but testing the underside of the 50-day simple moving average. Bearish. But testing the underside of the 50-day simple moving average. And the NASDAQ is unknown, but you would technically say it has not broken its bearish trend. Economic reports, not a whole lot's going on. Fed beige book, that will move markets tomorrow. Initial continuing claims, leading indicators on Thursday, existing home sales. Not much internationally. In fact, internationally, the best thing I have is looking at the French election. We might see some movement overseas on the French election. I put it in here for you. Pretty interesting read. I also have a little bit here on how we have someone that believes that the market gains double when this happens, and it's the S&P versus the VIX spikes. Pretty interesting read. Don't know if I'd buy a whole lot into it, but the correlations are there. How am I looking to trade? I'm preparing for earnings. There are some positions that I'm going to do full callers on. There are some positions that preparing for earnings that I'm just going to run long puts on. And that's where I'm at. So what questions do you guys have for me that you'd like to go over? Ida, I'm sorry, I missed a couple of your questions. What are NVIDIA's strongest competitors? You have a couple, the Qualcomms you could use, Intel, you have Adobe going into some graphics and artificial intelligence. You also have Western Digital that brought up SanDisk. What's unique? They really unique are their graphic cards are top of the line, but other than that, there's not a whole lot. So yes, I don't see the justification for a 50 times earnings on their current price for NVIDIA. Roy, we be adding short calls to Zions for earnings? No, I will not be adding short calls for Zions. Zions is a regional bank, and with the uptick in home sales, the regional should be doing better. Plus, Zions has already lost literally over 20% of its value from that 49 all the way down to where it's at 40 not too long ago. So I will not be adding short calls. I would expect any or all news is kind of baked into Zions. I have long puts for a break below 30 or 40, excuse me. I got 40 and 31, so I've got them already in place out to May. Looking at Zions Bank, which is out to the 24th. But based on the home pricing, the beige book, we had the NAHB, which still is at 68 yesterday. Homes are still doing okay. And not only that, they've made more money through this quarter with a rate hike. I would expect to see a bit of a rebound on Zions Bank. If we bring up the FinViz to look at a quick chart to give you more of an example, look at that spike up to 48, down to 39, a quick drop down, touching the support here that it was in November. before it made this run up. Made that run up, the big run up more in December with the rate hike, and they're a good regional bank. They're still relatively cheap on an earnings per share. In fact, if you work some of the numbers on Zion's, why I look at it, forward PE at 13 on an earnings per share of if you're going to go forward, earnings for next year, 2.97. So, getting my calculator, 2.97 times 13.42. Wow, right in line right now for up to next year. Looking at this year, P of 1.99 times 19.99, 39. So, little bit's changed. I'm going to go through and rework my calculations for these guys. But normally for Zions, I'd calculated, well, if you go back in time, at one point in time, these guys were all the way up to 130. But my expectation was to see them closer to 50, and actually, it comes from all the upgrades. Look at all the upgrades that you've seen on Zion's Bank. Upgrade since December. All going higher. Price targets between 49 to 42. Still have some room to run. And now I do have a marker closer to 48 right now. Gets back up to 48. Looks like it's going to turn. That's where I will obviously add long puts on again. 95.90% institutionally owned. It's a pretty good bank for a regional. Any other questions you guys have? Doug, how long have I owned Zions Bank? I've had some Zions Bank for years. I remember trading Zions Bank, I want to say last year, down around 20. And I can go back and look at a chart and see it around 22 last July. So we basically have a stock that's doubled in the year. And the neat thing is, if I go out in time, we have a stock that could double again. And of course, that's going to happen over time, probably a couple years. All right, hey, I don't see any other questions, guys. I appreciate you being here tonight. Thank you for your time. I will get this posted for you later on tonight. Glad to be back. Glad to see you guys here again. Great opportunity to keep asking questions. If you'd like me to go over some questions of some things during this, go ahead and text them on into me. Not text, email. I guess you can text if you want to. But set it on into me, and I'll take care of those questions and make sure that I have them in here. Do make sure you read Market Gains Double when this happens, and also make sure you read the French election. That'll be the next thing that'll happen to us here in a couple days. Not to mention, we're going to have a debt ceiling towards the end of April. Let's see if Republicans can get together, if they can work together. Pretty nice, though. On $7 million, I look at in general, if I'm up $5,300 on a 113-point down day, I usually feel that I'm doing pretty good in people's accounts. Gives me an overall understanding that the positions I'm using and the methodology works. Guys, have a wonderful evening. I look forward to seeing you again next week. And again, if there is something in particular you'd like me to spend some time on, do send me an email, and I'll see if I can't fill it in. I think this is the second time I've done NVIDIA, and it's nothing more than me just, again, as they come in, I'll get them answered. Guys, take care, have a great night, and I will talk to you later. Bye-bye.